Hello and welcome to A Step Ahead, a special initiative by HSBC and ET Now, where we're putting the spotlight on companies that are driving their future-ready agenda. On this episode, we're bringing to you a company that is ensuring that you have a smooth ride. But while it might be looking easy, in actuality, it is quite a bumpy ride. But their level of commitment, their ability to innovate uninterruptedly, and the way that they manage their processes is what sets them apart. On this special episode, we've brought to you one of India's most trusted brands, CEAT. CEAT is one of India's leading tyre manufacturers and has a strong presence in global markets. With its production capacity of over 15 million tyres a year, CEAT is known for changing India's industrial landscape by reassessing quality in internal processes and has thus stood strong by building best-in-class products through a culture of continuous innovation. And I'm now in conversation with the Managing Director of CEAT, Anant Goenka. Hi Anant, thanks so much for talking to me.
Thank you.
You know, CEAT won the Deming Prize in 2017 and it's kind of like the Nobel Prize in total quality management. So take me to that journey.
Yeah, so this was more than 10 years ago. We had a situation where we changed one of the contractors in our factory, and that led to a strike between management by the workers of the factory. And it was a situation where there was a lot of mistrust between workers and management. Productivity levels were low, trust levels were low, a lot of non-value added activity to be done by management. And we found that and at that same time a group of us went to Tokyo for a training program. It was held by the Japanese Union of Scientists and Engineers. And we visited plants like Toyota, Hino Motors, etc. And we saw them and the way they worked, their productivity levels, the way they drove improvements, and we were just amazed by that. And then when we went into a little bit more learning and understanding of what they did, what processes they followed, we were like, this is quite incredible, let's give it a shot, let's see if we can work towards that. And we've been then practicing TQM over the last 7-8 years.
Super. How are you ensuring that the TQM stays up to date, stays efficient, so that CEAT stays efficient?
Right. So TQM is largely a philosophy. It's more like a mindset and culture. So what it talks about is, are we thinking long term? Are we taking decisions based on data and facts? Most importantly, is customer at the heart of everything we do, and our reason for living is towards solving customers' problems. Do we have right systems and processes towards the way we work? So I think these are things that are timeless. As society is becoming more and more important. Even the way we do CSR, for example, is becoming, we do it in a TQM way. So when you have to work towards doing something for society, we go in and do a need analysis, seeing what are the key needs of the area that we want to help in. And then there is a proper process that we follow, where we then decide how we have to intervene, and there is a clear metric towards saying that, okay, when we started doing something, it was at X level and now it has improved. So it's more towards putting in systems, putting in processes, again towards something which is now becoming more and more important.
So that's really integral and important. Another thing is innovation. So innovation in supply chain management, again, which is a major key component of your business. How are you incorporating innovation into supply chain management, basically doing things a little differently?
So I think the key role of supply management is making sure you're able to deliver the product on time in the right quantity to the customers as per their requirement, and doing that with minimal or zero inventory. I mean, that's the basics. Now, what we work towards is that how can new ways of working help us reach that goal, and that is largely as digital is becoming more important, visibility of data is becoming easier, we are leveraging that to make sure we are able to service the customer better. Now, a few examples that come to my mind is, say for example, an auto replenishment system. So we work towards a complete pull system in supply chain, so that there is largely no overproduction that happens. So whenever there is a sale that happens, we make sure we only produce at that time rather than producing and then selling. Now, to make sure that that sale happens, you need that visibility. So we have, for example, an auto replenishment system. So as soon as our distributor material goes in for finally secondary sale, we are then able to immediately supply from our factory. So there is no ordering system, a lot of waste gets reduced as well.
So of course technology is helping this a lot. But is technology also being implemented maybe at the plants? Like, you know, we hear about robotics and robots being used in auto manufacturing. Is that happening in tire manufacturing also?
Yes, it is. We do have robotic systems in our factory, primarily right now for tire management.
Okay.
So you're producing hundreds and thousands of tires every day. They have to be sorted. There are multiple SKUs, and the complexity is really increasing over time. What's happening is today we have to produce tires for an old Fiat which is still on the road, and all the new launches that are happening every month.
True.
So the complexity is just incredible. So you have to manage your finished goods inventory by using a lot of robots. So that's one. But again, there's so much more change happening. Some of the big changes are towards, say, prices of sensors coming down substantially. So all across the value chain in manufacturing, we have sensors that we put in especially in our new plants. And then use of big data, AR, VR, 3D printing, all of those changes that are coming in place. We are trying to understand how do we make life easier and deliver these results by using some of these.
The other thing what I wanted to know is, you know, we're living in a VUCA world where there's volatility, uncertainty, complexity, ambiguity. How do you manage your supply chain in such a space where again you're across the globe, so managing for different countries, different markets? How does that work?
Yeah, so currently we manufacture all our tires in India and they get exported to necessary countries. I think here it is not particularly complex because we have distributors in each country and we supply to the distributor as the demand comes in. I think a few things that we need to be careful because you're supplying 100+ countries around the world is making sure we don't take any calls on forex. So we are fully hedged on our forex position. No calls on commodity movements because that's becoming more and more volatile. For us, rubber and crude are very key commodities in that sense. And how do we spot opportunities? For example, US-China trade war that is happening. I think this is a good opportunity for India to supply to countries like the US and EU where duties on China are being imposed. So just being vigilant of what are the opportunities that come in as a result of that is also very important.
So one final question on this is, you know, to again expedite, to improve your supply chain, to better manage TQM, people also open different factories. So while you said you're currently manufacturing only in India, do you foresee a time maybe in the next couple of years where you could be opening a factory in another country to help you better your production or time to market?
There are no plans at this point of time, but certainly we would be open once we reach a relevant scale in that particular country. So it could be EU, it could be Indonesia. For example, Indonesia, there is a large duty that goes in for tires that come in from India. So if you reach a certain quantity and it's worthwhile, we will certainly look at it at that point.
Superb. Well, Anant, we'll take a short break here, but our conversation continues. We'll be talking with Anant and also Rajat Verma from HSBC Commercial Banking will be joining us after this short break. Don't go anywhere, we'll be right back. Welcome back to A Step Ahead, a special initiative by HSBC and ET Now. My conversation with the Managing Director of CEAT, Anant Goenka, continues, and I'm also joined by Rajat Verma, the MD and Head of Commercial Banking at HSBC India. Anant, before in the earlier segment, we were talking about TQM, but I wanted your perspective on how is TQM in India different from what's being done globally?
So the TQM philosophy originated in Japan. So a lot of that has spread in different parts of the world. And different countries have taken on their own business excellence models. For example, in the US, Six Sigma is more common, which was propagated by Motorola, but along the same basis. So the principles are very similar. But in America, they want numbers. So when they want numbers, Six Sigma means 1 in a million defects. So the concept is similar, but that's what works there. In Europe, there's an EFQM model. So these are all business excellence models which kind of everyone follows in some way or the other all around the world.
True. Okay, interesting. Different perspectives for different places around the world. Rajat, one important part of TQM is managing the finances, with whether it's your vendor finance or of course the company's finances. Your take while you're here, the India specific thing first I want to come to you, is how is the space evolving in India? How are you, because with companies like CEAT and other corporations, they're not standalone entities. They are very much working, partnering with vendors, different suppliers. And banks or the banking system does help those vendors. So your sense of what's evolved there, maybe how's technology playing and helping that space?
I think it's probably the most evolving part of banking that I can see in the wholesale banking space. A company is part of a web.
Yes, yes.
Its customers and its suppliers, and it's linked to each and every part. The traditional form of financing or supporting a company is to the corporate or through the corporate, right?
Yeah.
But if you have effective data and if you can somehow disaggregate all of this financing, then you can reach more people directly, more effectively, and equally you can take the load off the corporate, which is currently being in some ways the conduit for all the processes and the financing and all of these efficiencies. Right. So I think in that context, India is making quite a lot of changes. Started, of course, it needs to have a uniform tax model for that, right? A uniform engine which identifies a sale, which is the GST model. It needs to have a uniform set of information about clients, about their credit profile, etc. So what I'm seeing in this space on the supply chain side is that slowly, quite slowly, but these things are quite slow at the beginning and then they can ramp up quickly. You're seeing that there is some level of science going into financing the supply chain. Okay. What used to be a very judgmental call, okay, you're the dealer of so-and-so auto manufacturer, you're there for 30 years, let me lend to you. Right. Now that's an important data point, but it shouldn't be the only data point. You should have data about the inventory, about whether there is any push into that dealer, etc., etc. And when you have that, you can make a more informed view of that client, of that disaggregated supply chain participant, not of the wholesale client. So that seems to be happening.
So I guess that is where maybe, like you said, GST is also helping as more and more data is generated, collected and analyzed. That could help there. Anant, on the GST part, a major reform for the country must have impacted you also because you have operations all across the country. Yeah,
so GST I think has certainly helped, even though tire is considered in the highest bracket of 28%. But I'd say overall it has clearly smoothened out the entire supply chain. So when you look at our locations of depots or CFAs, they were very often located based on what is tax efficient as well as what is closer to the customer and most efficient from a supply chain point of view. Now you can remove the tax efficiency part or tax component of setting up your supply chains and purely focus on what is most cost effective and easy to reach the customer. So to that extent, we've been able to rationalize a lot of the structures that have been placed. That has reduced cost. The second is there were a lot of taxes that were there. For example, we have a factory in Bombay where we were paying LBT or octroi for any goods coming into the Bombay area. Now that's gone off, so that helps as well. And finally, the entire efficiency of the trucking system. So getting harassed at toll nakas, waiting for hours, 6 hours, 10 hours of waiting time at each checkpoint and so on. All of that has reduced substantially. So the efficiency of trucks has improved quite well as well.
Rajat, one other angle to this is the technology part. So again, while technology on the everyday use of managing records, of predicting inventory to a certain extent, the other angle is blockchain or distributed ledger. Again, very early days, but in the financial services industry, it's being used more and more rather than any other industry. Do you feel that that can somehow be pushed across or will soon permeate into the manufacturing industry also? The distributed ledger thing, I don't know.
Yeah, I think, so if you see what is happening in global trade, which is, so distributed ledger or blockchain is tackling the most complex problem.
Yeah.
And that is how it should begin, because it is tackling cross-border movements across 2 or 3 or 4 jurisdictions, different counterparties, different regulators, seafaring, etc., etc. And it's still at its infancy. So there have been a few transactions out of India. Ours was, we partnered with a corporate here to do the first transaction quite a while back now. several companies have done transactions after that. So the point I'm trying to make is that distributed ledger as a technology is essentially a set of a diverse environment being brought onto one ledger, so to say. To put it very simply in very layman language. If you can do that for a very complex problem with 15, 20 counterparties, you can certainly do that, use that test case or use the same technology for 3 or 4 counterparties, which is what you would, what you typically face in a local environment. So if it can be done across 5 regulators and 5 geographies, it can be done locally as well. Okay. So it holds a lot of promise.
Right. Anant, the auto industry is in a tough spot right now. Of course, this is having some cascading effects on your industry as well. How does one prepare for this? How do you foresee the future of, again, maybe a slowdown as well as an upturn? How do you manage this?
I think while certainly we have been affected by it, it's not as bad on the tire industry because about 60% of our sales still goes to the replacement market. So people still need to replace, and that is a market which is showing positive growth. Okay. The other is about 15% of our business gets exported. So about 70% of our business is in positive territory. It's the balance 30% where you see these substantial negative numbers, minus 10, minus 15, 20% kind of numbers. So that is an area where certainly we need to manage, but it's not as bad for the tire industry as it appears from an outside perspective when you look at the auto company overall, auto industry overall. But I think a few things that we are working on is how do we sell these excess capacities into other regions like other countries around the world. So that's one area. The other is we have also postponed some capital expenditure. Right. Okay. And I think you have to be very nimble-footed, work towards bringing down working capital. Don't produce if there's no demand for certain categories or certain areas. So I think you just have to react fast on managing working capital, managing your capex cycles, and seeing what are the areas that you need to sell.
How can banks be partners to guide corporates using their international network of research and just these thought leaders that you also in-house have?
Obviously, there is there's a bread and butter part of banking, which is the lending, the cash management, the trade, and all of that. There's the investment bank side where you have strategic discussions on. But then there is this equally important third pillar, if you like, which is really the ongoing engagement with the company, which is really, which doesn't fall into the first 2 categories. So for example, if a company is looking to go overseas, then they may just need to know the lay of the land or the let's say the exchange control regulations. Now usually bankers would know a lot about this because they're entrusted with that task by the central banks and so on. So I think I see that as a very critical part of a relationship bank, really to go a little beyond what you would, what's really just written down in your task, and to help and advise companies. So I gave one example of companies going out, companies going in. It's even, I mean, India is exchange control. I mean, I tell you that the number of foreign companies who come to us just trying to understand the maze and what they would do. Now we're not truly financial or tax advisors, and therefore we don't go into those directions. But there is a lot of other advice that we can give pro bono, which we do, and I think it's part of our responsibility. You mentioned about research and economics and thought processes, etc. I think blockchain is a great example of that, right? I mean, it is financial institutions coming together to try to form a system which works better for corporates, right? So the need is driven by corporates and by complex corporate transactions, but if it's not championed by institutions in the financial services, it will take 10 years longer than it otherwise would have. So I think clearly one of the tasks of a leading financial institution, any leading financial institution, is really to step up and to try to contribute to sounds very high and mighty, but to the betterment of the corporate world and more generally to the world as well.
Well, we're just about running out of time, but Anant, your final word, your take, the way ahead for whether the industry, for other players in the industry, your advice on how they should be more nimble-footed, how can they be nimble-footed to manage the ups and downs that, of course, the market will bring to their processes?
See, I think cycles are a part of life. And just to give a contra opinion, this is the time maybe to invest, because this is the time where you actually get materials cheaper. It takes some time by the time capacities come up, and it's a time where you have to be ready for the future. So you take advantage of low pricing at this time, invest for the future at this time, and then when good times come, you're ready to take advantage of that opportunity. So so
quite a contra view on that. Rajat, final word on your take on this. What can you see for the next few years with the finance space, of course, but more of like, how are you foreseeing the TQM, the supply chain evolving in India from a banker's perspective? I'm asking you from an outsider's perspective in. And then I'll come to the insider's perspective.
Just a slightly more broader comment on, certain industries are facing some headwinds, right? I think it is in these times that companies which are going to be more long-lasting, are stronger, have stronger management, more vision, they look inwards and they try to look at their processes and their supply chains and try to improve, cut their costs down, redirect sales to where and that gives a great sense of longevity to a banker. So sometimes it's like the old-fashioned saying, it's the tough times that you really test a person. It's true for banks and it's true for corporates as well. So that's how I'm seeing the current period of time in certain industries, not everywhere. It's not all doom and gloom, but yes, that's how I'm looking at it. And as far as, I'm very optimistic on the way the speed of change in India. We're actually championing as a country. We're actually championing a lot of technology in financial services. It's already there in your personal space on your mobile phone as a personal banking customer. But if you look at the wholesale side, that is coming quite fast. And I think there's a lot of work that people have done on India Stack, on UPI, on ACH, and now you're seeing it come into financing of the supply chain. And I think it's still not seen what it could be, but these things will move very rapidly. So I actually feel that India will lead the way.
Okay, amazing. That's great to hear. Thank you for that, Anand. Thank you for that, Rajat. It's been a great discussion with both these gentlemen, and I've got some interesting insights into TQM, supply chain management, and also about being ready for the future. You've been watching A Step Ahead, a special series by HSBC and ET Now, and it's been an amazing journey. We met some great companies: Renew Power, Xiaomi, WNS, Shriram Road Transport Finance, and of course CEAT, and they've all given us great insights into their working and how they are foreseeing the future and how they are staying a step ahead. Thank you so much for watching. Here are the key takeaways from the episode. India needs to have a uniform tax model like GST to streamline processes for the manufacturing sector. Distributed ledger and blockchain will be tackling the most complex problems. Companies that are going to be long-lasting have a stronger management and regularly aim at improving their processes and supply chains. Essential to adapt with changing trends. Can be advantageous to sometimes take a contra view for a situation.